and we're very lucky to be joined today by Cheng Wang, which is CFO of Overclock Labs. And yeah, Mr. Wang has a
Pleasure.
very impressive track record at keeping Overclock steady throughout the good times and throughout the bear as well. So he comes with a table of years of experience in the TradFi and startup experience industry to round out the team at Overclock. So thank you, Cheng, for coming. How are you today?
My pleasure to be here. Thank you for having me. And yes, it's been a wild ride. 5 years and less than a month with Akash and Overclock Labs. And actually, a little bit of an update is as of this year, I've assumed a dual role here at Overclock Labs as both COO and CFO.
Whoa, wow! Congratulations. So that's a
Thank you.
big
Thank
deal.
you.
Awesome. That's a so yeah, they gotta make some announcements so people can get to know these
I don't
changes.
think it's more for just like internal stuff, right? Because as the company and as the project has grown significantly over, gosh, in the 5 years I've been here, right? The need for, I think, internal organization and internal scaling of just practices, procedures, getting people in the right place at the right time has become, ever more, I guess, just that much more important. In addition to that, like Greg's time, our founder and CEO, right, is much better spent out there evangelizing and pitching and doing the things that he does best, and that is really his superpower, being out there, being the face of Akash. And internally, however, we got to get our ducks in the row, and I'm that guy.
Well, good. Oh, hey, we have more people joining us. Welcome to the very first Akash Club Fireside. All right, Cheng, and I let me start by saying that we don't actually get to see a lot of Cheng out in the media circuit or out on X. So your role is pretty mysterious, So I know that we see you a lot during special interest groups meetings, especially the economics one. But for everyone else at the meeting, now you're CFO, you're COO. Can you tell a little bit about your specialty at Overclock, like what exactly that you do at this point, right? Just so that everyone can get to meet you.
Yeah, for sure. And not being that active on X, I kind of have random spurts here and there, and not being out there too much, I think, is partially, I don't know if it's by design or happenstance, but I'm generally a more private person. I don't really have a big social media presence at all, and I prefer and that way it has nothing to do with anything other than just my personal preference and views, and I myself like to stay focused. I get distracted easily, right? So I definitely want to stay focused and not get kind of pulled into the external stuff. What I do here at Akash, so it's highly varied, right? The key thing really is keep Overclock Labs running, right? Make sure that we have money in the bank. We make sure that the cash flows, literally, pun intended there, to everywhere and everyone that needs it. Obviously, Scott Hewittson, he's on our team as well. He's been instrumental in helping me do that. I can't, begin to pretend that I'm the lone man making it happen. It's a whole team that makes this whole operation successful and makes it hum, right? But, in the broad scheme of things, make sure that we have money in the bank, make sure that payrolls are paid, making sure that we look down kind of the bend over the horizon, if you will, and see what our needs might be in 12 months, 24 months, right? So that we can be prepared now for what's to come later. So for example, now the market's in turmoil, but we position ourselves in Overclock Labs as well as Akash to the point where we don't necessarily have to worry, right, about the impending bear market wherever, if that does come to pass, because we're well positioned, right, from a war chest perspective. So that's just kind of the broad highlight of what I do here over Clock Labs. From an operational sense, in terms of taking over the COO role, it's really to ensure that the team members, especially at the executive level and senior members of the team in Overclock Labs, work well together and do everything that they need to be done, right? It's kind of like there's part of the chief of staff thing, right? To ensure that everyone knows what their goals are, everyone knows what their results ought to be, what the expectations are, and manage against those, and to make sure all of this information is distilled in two directions, right? Both up to Greg and down to all of the rest of the company, right? So that everyone knows exactly what to do to keep everyone honest and manage those personalities and talents that the vast array of personalities and talents that we do have here at Overclock Labs. And again, none of that would be possible without people like Tyler, right, on the team to help make all that happen. He's very visible for the Akash Network organization, managing special interest groups, working groups, always out there talking and speaking on behalf of Overclock Labs and the Akash core team.
Right. And what is Tyler's title? Sorry, for people who aren't familiar.
Oh, Tyler Wright. Tyler Wright is our operations director. So he's essentially one level below me, and he does all of the operational stuff on the side. He's the guts and glue guy, or I like to call it. He internally he is a celebrated individual, and then externally should be as well, right? He makes sure he's the one that does all of the nitty gritty stuff that people don't want to necessarily do, right? Like taking notes, distilling meeting notes, minutes, excuse me, following up with people, keeping projects on track, and just like making sure that information flows between individuals and teams, and bubbling up issues before they occur, hopefully, or at least issues when they're small. And so we can address them, right? Obviously, a group of people, as you work with one another, right? There's bound to be some tension that arises here and there. And it's part of his job and personality to help address those things and make sure that we work as well together as we humanly can.
Okay. Well, thanks for that. And so I just want to talk a little bit about what we've done today. So thank you for coming and thanks for sharing. And we have gone around and asked our community, and I've asked through multiple communities, which includes our Akash Club, which is a growing community, but also communities like the price chat and the overall main chat, right? So we can gather all the questions and we ask them, what would they ask the CFO if they had a chance to? And so I do have a couple of questions here to start, and then we do have a couple people in the audience if they want to chime in later on. Hopefully we'll have time for that. So if that's okay with you, I'd like to get started with that.
Let's do it.
Yeah? All right. So,
ready.
Okay. So right here, the biggest question that's on everyone's mind right now for you is that there's been a recent proposal that just passed out in on Minscan basically, and this proposal is about the market liquidity and depth, and in it basically we have like 3.5 million AKT tokens that are coming out of the community pool, and they're due for market making and for building liquidity. So the first question really is, what exactly does that mean, and what's happening with our AKT?
Yeah, that's a great question, and let's break that down. So, Akash, when you go out there, Akash is an asset that you can trade, right? In various different markets, both centralized exchanges as well as decentralized exchanges. When you go and purchase AKT, or when you go and sell AKT, someone has to be there to buy it, someone has to be there to sell it, right? To you. So if you want to buy it, you have to buy it from someone. If you want to sell it, you have to sell it to someone, right? And so the process of matching the buyer and the seller is what's called market making, right? You make the market. And so, and when a project first starts out, like for Akash, and for us, we're still relative to a fully developed market, like let's say Apple, right? A company that I'm sure everyone knows about. Even Apple, for example, or NVIDIA use market makers to facilitate transactions or logic, right? And this is kind of part of my TradFi background. So it doesn't matter, companies large, small, everyone uses market makers to essentially help liquidity flow more seamlessly from buyers to sellers and sellers to buyers, right? And to make match essentially liquidity, right? Orders from one side to the other and cost and capacity. So where the capital goes in this particular proposal is we go to the community pool, request 3.5 million AKT, and that will be essentially deployed to market makers to create markets for Akash. So typically how a standard agreement would work is as follows. Let's just say we work with Joe the market maker, right? And Joe the market maker says, hey, I am a institutional grade market maker. I've done incredible work with these projects, et cetera, part of our due diligence process, which clients have served, how I've done, where some COOs KPIs, what markets do you support, what exchanges do you support, right? The best market makers, of course, support all of the biggest exchanges in the world that you might be familiar with. And we'll go with them and say, okay, we want to reach a deal with you to support AKT markets in, let's say, Kraken, Coinbase, Gate, and let's say Crypto.com, just to name a few, right? And we want to make sure that there is enough depth and liquidity for anyone to come into Akash and buy and sell AKT with minimal disturbances in price, right? Because that's what we want. So in that case, what I mean by that is if you look on CoinGecko or CoinMarketCap as aggregators, and then of course you look at exchanges and you observe the order book, you'll see layers, right, depending on how it's displayed. But it's probably cleanest in aggregators, CoinMarketCap, CoinGecko, where you see plus 2%, minus 2%. And what that indicates is how much, and a dollar figure rather associated with each one of those. And what that indicates to you, the user, is how much can you sell or buy in an AKT over 2%, under 2%. So plus 2% means how much can you buy AKT without moving prices over 2%, right, in that particular spot market. The minus 2% states how much of AKT can you sell in a particular market without moving prices more than 2% down, right? And so those are really important metrics to facilitate a healthy market, because the smaller that number is, let's just say it's $100, that means if you want to sell $100 worth of AKT, you might move prices over 2%. That's not very enticing to folks who might want to accumulate large positions, right? And who might want to accumulate large positions? Maybe Joe, who's a whale, or someone else out there, institutions, funds, etc. Liquid funds are always out there trading, looking to accumulate positions that they feel conviction in, right? And so the larger that depth, the 2%, the more liquidity there is for people to soak up either way buying or selling, which ensures or helps facilitate a healthy market, right? And so to kind of like wrap that all together is to say, if I'm a guy coming in, or if I'm an institution coming in looking to acquire AKT, and I'm super bullish, I want to acquire $100,000 worth of AKT, can I do so in reasonable fashion, relatively quickly without moving the market, right? So if I buy $100,000 worth of AKT, will I send the price, up 20%? And for Akash, it doesn't happen because we have sufficient depth to enable that 100K to be bought down, moving relatively small margin, within a small margin, or probably 3% or so in today's depth. And similar thing happens on the sell side, right? To where if I want to get out of this position of $100,000 AKT, I can do so without disturbing the market and losing my pants on sale. And so that basically builds confidence from buyers that they can enter into significant positions and exit significant positions relatively seamlessly. And so that kind of builds confidence in people trading. So the market makers serve an essential role in doing that by essentially putting up capital onto the order book and says, hey, you want to buy AKT? I'm going to take AKT, put it up here, and if you want to buy it, you're going to buy from my bag, essentially, AKT up there. Mm-hmm. If you sell AKT, I'm going to put up my stables, right, or whatever the other side of the pair is, and so if you sell, I'm going to be there to receive orders and buy AKT from. And so that's where the $3.5 million worth of AKT goes to market makers, where a portion of those AKT will be dedicated to the market maker to make that AKT available for people to buy, individually buy it. And on the other side, the market maker will essentially pledge their own principal capital, right, as USDT or maybe depending on the pair of USD, and say, if you want to sell AKT, we'll be there in the market to absorb that sale. And so that's kind of the basic premise of market making and why it's important. Hopefully that wasn't too complex or long.
No, I mean, people need to realize these things, right? So the question I have is that this is more like a loan to the market makers, and it's their job to basically go around the different exchanges to provide this liquidity when needed. Am I understanding that correct?
That's right. Yeah, that's a very great point. It is structured as a loan. So again, let's just use the example of Joe the market maker. We'll say we'll loan Joe the market maker, let's just say 1 million AKT, right? And you're going to use that million AKT and make markets with it. And so that means this portion of AKT is going to be allocated to this market maker. They're going to put it up and say, look, over the course of the duration of the contract, right? Let's just say typically it's a year, sometimes it's 24 months, sometimes it can be shorter. It just depends on how comfortable we are with the market maker and the kind of due diligence process, how big they are, what kind of track record they have, and how kind of exotic or vanilla the agreement is. And the standard loan option agreement is fairly vanilla, so those are typically the 12 to 24 months. And we'll say, we'll loan you $1 million worth, 1 million AKT, what is that worth at today's prices? Let's just say I'm looking at the screen here, 137, 138. So it's $1.37 million worth of AKT. And there will be strike prices associated, because remember, there's a loan portion, we loan the AKT, we sign the agreement in there, and then there's the option. So the option is really where market makers, because they're in it to make money, right? How does a market maker inevitably make money? And so the option is where they do it. So let's just say the price of AKT is $1.38 today, and I'm going to simplify this just pretty dramatically. We loan them the cost of $1.38, that's the current spot price. There will be options associated with to say, okay, we will, at the time of expiration, let's say 12 months of this deal, when we return, we have the option to either return the tokens to you, 1 million AKT, or return some amount of stablecoins to you. And that stablecoin amount is determined by the strike price. And that strike price is typically spot with plus some kind of premium, right? So spot at 138, and let's just say premium is 100%. So that'll be what, 176, right? So if you double that, 100% premium, that means at the time of expiry, if AKT prices are below that premium threshold, they will then return the original amount of AKT, 1 million AKT, back to the project. In this case, Overclock Labs, and Overclock Labs will either put that back into the community pool, or ask the community would recycle that into further enhance liquidity. Or the other thing that can happen is, if AKT price, let's say, go up to $5 and it's way over that established strike price, what the market maker then can do is say, we choose to exercise this option and return back to you 1 million times, 276, right? So $2,760,000 in stable coins. We keep that 1 million AKT, and that's how they make the big chunk of the money right there. Because now they have AKT at $5, but they bought it from the project at 276. And so that's why the strike price is important, and it incentivizes market makers to essentially do a really good job facilitating healthy market behavior over time. It's not a quick win thing, right? You have to build confidence, you have to build liquidity, and muscle memory over time. And from market participants in order to really make money on the back end. So that's where market maker incentives are mostly built in, is the difference between hopefully where the execution, where the spot price is, versus where they execute the trade at.
Okay, and then so another thing that we had around the community was some were very specific about which market makers that they want, and I was told that more than likely you would be unable to let us know which is the one, but there were some market makers that seem to have a negative reputation, and so I guess here's me hoping that we're not using one of those, right? So do you have any comments that you can share regarding that type of speculation?
Yeah, I mean, if you want to tell me the names of them, I would love to hear about it. I mean, again, like, the Streets research is definitely worth its fair share in gold, so I would love to hear everyone's take on it and where that information kind of comes from. But definitely, I agree that there are some who have better reputation than others, right? Some are known to manipulate, some are known to do pump and dumps and all that kind of stuff, right? And some are less than savory. They may not necessarily do what they say they're going to do. And so, but for us, I can't necessarily share names directly because it's relatively proprietary in that vein. I'll see what we can do though with this tranche of capital as it gets deployed. But it's typically for the purposes of this call, before kind of checking in with the legal team and their legal team, I would rather not step in it, as they would say. But yeah, I completely empathize and understand. That's one of the reasons why we do due diligence. And we actually get reviews from other people, other clients that they serve, to say, look, how have these guys performed for you over time? What shortcomings have you seen? What issues have you seen? In addition to that, for me, I'm very data driven, and I come from a TradFi background, right? So I generally know what I'm trying to look for and what I'm looking for, and reporting and seeing these things and questioning, right? Like a lot of market makers, for example, historically speaking, do not provide live reports. So, for example, you can't just log into a dashboard and see, hey, how much depth are you providing right now? How many orders are you actually serving, right, in this particular market, that particular market? And so we have internally, we have vendors and tools that we can plug into each one of these markets to see where those things are, and we can cross-reference that to market makers. But the good thing is, to date, most market makers that we have come across now are either in the process of or already have real-time dashboards, right? Relatively real-time, updated within, say, 15 to 20 minutes, right? And that's been incredible, because historically market makers will send you a report, especially back in the day, like 4 or 5 years ago, once a month with this like CSV. You're like, well, this isn't really any good to me. Let's just say you screwed up somehow, you manipulated the market, you weren't really there. How am I supposed to address that a month down the road, right? So now having real-time dashboard now available with the majority of market makers, that's been a huge boon to us, for sure. I think someone had.
Well, I just want to say that we're a bunch of normal people, so we don't really know. We're not clued in, but some of the community members were very bearish against Wintermute, and they were very fun with GCR, and that's about all that we know. But I think that's just some trader talk. So I'm good to move on from there.
I would neither confirm nor deny, but. I understand what you're saying. Just leave it at that.
Right. Yeah, we'll just leave it at that. Okay, cool. So, as we're talking about these market makers, let's move into listings for a second, right? So we've seen that AKT has started to show up in So we've basically seen AKT start to show up in more top tier exchanges now, but we're still waiting for the one. And you know which one I'm talking about, right? So this question is going to be two tiered, right? So part A is what would it take at this point for us to get on there, right? Like, how do coins with arguably less utility, right, get on there before we do, right? So that's the first part of the question.
Okay, so how do we get on there? If I knew, we would be on there ready. So that's number one. It's, I think the internally the team, I think, has this struggle of understanding as well, right? Because it's very nuanced and varied, right? So like, I guess, and some of this is guesswork, some of it is educated guesswork. I'm sorry, did you want to ask a question, Angie? I know you've been raising your hand for a minute.
If you wanted to interject, you can, please.
Okay. Yeah, I was trying to unmute myself. I had a couple questions. One was about, would be going back a little bit, but in general, just like when we get listed in general, like what are the mechanics of that? Like, do they have to actually acquire tokens in order to list us?
Great question. Yeah, so the mechanics of listing, and this applies for all exchanges, which is, number one, they do not have to acquire tokens to list us, especially if a project, I want to say, important to say, especially if a project is already operational and liquid, right? So like Akash, we've been out there for a long while. There's plenty of Akash in circulation. It's not just we're doing a Genesis event with an exchange, like an initial exchange offering or IEO, right? So for Akash, for example, there wouldn't need, the exchange themselves wouldn't need to get a allocation of tokens from the project per se to get started, right? So that's number one. The second thing is the mechanics of it are often, it can go one of two ways. It can either go fully, I'll call it managed, versus completely unmanaged, right? The completely unmanaged, which is the shorter one, is if an exchange likes what you're doing, and they just work in the background, and all of a sudden you wake up one day and you're listed, you have no idea what happened, right? That's the unmanaged route. Those are not as common, and there are some, however, in the history of Akash Network that happened this way, where we just didn't know that they were even thinking about us, and next day we wake up and say, oh wow, there it is. We weren't even talking to these guys. We have no idea who did it or when or how it was planned. And so just that's the kind of unmanaged portion. It's just we'll wake up one day and it's there.
Wait, so they would use market makers to have the listing on their exchange? Is that
no? So they would. So here's the mechanics that's important to know when it comes to, for an exchange, getting an asset onto the exchange, right? Like, what does it mean to list? I suppose that's the answer to that question, mechanically speaking. So a token, the answer is it depends. Akash is its own layer one, right? So as a result, there is no kind of other thing that they can clone to do. So for example, if you're an ERC20 token, right? Or in this case, like if you're base, whatever it is, like other chains that have been well established, and when other chains are simply just smart contracts on top of the base layer one, it's very easy for chains to list. So for example, if I was a Kraken or Coinbase and I wanted to list another ERC20 token, I don't know the exact mechanics, but it's easy. You just include the smart contract. There's no proprietary technology necessary to integrate, and boom, off you go, because it's the same wallet, same address, same infrastructure, all of the security stuff. It's all the same. So it's like they can list. That's why ERC20 tokens get listed super, super easily. So that's like one consideration, right? And it's not just like how quickly and how easy it is, but also if there's a custom integration like Akash will require, right? Because we're our own custom layer one, the exchange has to pay for technical integration internally. So they have to pull their dev team together and say, okay, now we need a wallet infrastructure, we need a security infrastructure around it, right? All multi-sig, their cold storage, all that kind of stuff, their hot wallet management, the infrastructure, everything related to it, the GUI, like connecting to our RPC nodes, all that kind of stuff, right? Governance, potentially, needs to be considered for Akash in order for Akash to be listed. And so that's like just a technical component of it. And one of the considerations when thinking about that is for an exchange, if we list a project like Akash, how much time and resources and effort do we have to put into it relative to, say, a bunch of shit coins on ERC20 that I can just press a button and spam them and off they go, and that's it, right? So exchanges, the way they primarily make money is on transaction fees, right? So the higher the turnover, or how many times the token makes a round trip, each time it's sold and bought and sold, they make a clip, right? So the greater the transaction volume on a particular token, the greater the more money the exchange makes simply on transaction fees, right? So in that vein, I just covered prior to this, they're more incentivized to list tokens that are easier to list because it doesn't require their dev resources, which are relatively small. And it's important to know that a lot, especially with wallet and security management, those teams are necessarily small and siloed to control the flow of information because you don't want breaches, right? So if you're a developer and you're working on the wallet side of things and you're managing security, you don't want 500 of those people having access to like your private keys, or at least portions of it, right? So the more people you have in that team, the greater your attack surface, and the greater your attack surface, the greater the risk, right? So you want that team to be necessarily small, and as a result, allocating that extremely scarce resource is a huge kind of marker in their head that they have to check, right? So they're incentivized in that sense to list projects that are easy to list without, incurring a lot of technical resource allocation. So that's one part. The other part is assets that have high turnover. Typically super, super speculative assets, meme coins, etc., right, will have much higher turnover. People will buy and sell these things like crazy, right? So you have hundreds of millions of dollars of transaction volume. And so that's also another consideration. And then third, sometimes it's some exchanges, and again, I'm not going to go into the specific names, but you can guess. Sometimes there are internal kind of politics that are pulling at these things, right? So there are business development people potentially that go out there and source these particular projects and deals, right? And it depends whose voice is stronger, who's better represented at the table, and of course, then there are just an overall narrative, right? Of what sector is hot, what coin or what chain is hot. And that'll kind of determine a lot of that stuff as well. And so those are kind of the three things. And I would say the fourth thing, and this kind of applies to Akash, is if another thing that exchanges sometimes do, especially when I don't know if you recall in the beginning of this question, when you asked if they need tokens, right, to list a project, right? So especially early on with projects, what they'll do is they will typically allocate a percentage of their supply towards or with an exchange, right, as a kind of exchange, for the lack of a better term, right, to get the project listed. And so with Akash's, from Akash's perspective, we're a completely decentralized network. We've been out there for 5 years at this point in time, right, or we're close to that. And so that's not something that's the network can do or reasonably do, right? Especially if they have the dollars and size that we're looking at. So those are kind of just four things to consider out there. The first three, I think, are really important. Is technical undertaking, is just the economics of what assets are going to be more profitable for an exchange, right? Especially relative to the cost of integration or non-integration, things like that.
All the first three things make sense. They're incentives. The one thing that's still unclear to me is the exchange itself doesn't it have to open tokens? Like the ones that happen behind your back that we don't know about, like they somehow they have to have
not really, because every single exchange will have a ton of market makers working for them already, right? And so it's non-trivial for the market makers working for or with these exchanges to have accumulated books of these tokens already, right? And so usually when a listing occurs, there's already market makers ready with the supply of tokens ready to go. So typically it's not that big of a deal. Especially for if a token is liquid, right, and it has been out there for a while, and market makers typically, not typically, but some market makers will only trade on behalf of projects as they trade, right, or as they get engaged by the projects. Some market makers will go out there and seek out opportunities in the market and kind of take on positions themselves, right, and so a lot of these market makers as a service will not just work for projects, but they also work on behalf of exchanges as well.
Okay.
Yeah.
All right. So as we're still on this topic about exchanges, I do have another similar in that vein question or a comment actually. So some people that I talked to felt that the Akash token has been underperforming and has placed a very high hope that a exchange listing would materially change this for Akash because of all the extra volume that they perceive we are missing out on. What's your take on that? Do you believe that we're missing out on some volume? Is that the silver bullet, or is there something else?
Yeah, it's a good question. It's again it's a very nuanced answer, right? So the short answer is there is no silver bullet. There is a silver bullet. Obviously, volume is always going to help, and in order to build that volume is why the first topic that we covered in terms of the market maker initiative, right? The funding proposal that we put in, it's to enhance that liquidity and the depth in hopes of generating volume, right? And so, how can volume be generated? It's really if people are interested in buying and selling the asset, plain and simply, right? And we, as a Akash Network and the core team, do not engage in this and will never engage in this and have not ever engaged in this practice, which is the dreaded W word, which is wash trading, right? And so there are projects out there that have there are various different ways, some sophisticated, some less so, to essentially synthesize volume. And some projects out there will do that, which is you will have a market maker working for you on behalf of the project, or a market maker that works for an exchange that can take tokens and just buy it and sell it to each other. So I have a wallet here, I have a wallet there, and I just make orders and I take my own orders all day long just to generate some amount of volume that is a number that I like. Let's just say I want to generate, no matter what the day it is, I want to have $2 million worth of transaction trading volume on an exchange for every day. Well, then that just means I need to just trade back and forth between my accounts sufficiently to generate that particular volume, right? And so that is a practice that used to be very rampant in the space, and I think it is definitely still being used to this day, though it has definitely waned in popularity, especially as people crack down on this kind of unsavory practice. But that's another way to generate volume, and we do not and will not do that, right? It's just a dirty game that we prefer not to play. And so the other side
is there a way to hold on? Is there a way for people not specialized to kind of look at that and see, or is that just specialized tools that we have to pay thousands of dollars for and we don't have it?
Well, it's not necessarily just tools, but it's also tools plus expertise and your presence on an exchange, right? So one thing that, for example, one thing that can occur sometimes, right, is so wash trading is one thing. Another thing that can be done, and I'll answer that question via this mechanism, is spoofing volume, right, or spoofing depth. What that means is, let's just say you look on CoinGecko or CoinMarketCap, you'll see the quoted that plus 2% is this much, minus 2% is that much. sometimes people will go in there and spoof that to say, hey, I have these orders here, and they'll do this through sophisticated algorithms, right, and internal trading bots, and say, I'm going to put up 100K worth of depth at a particular level so that it shows it looks really good, right? And sometimes what happens is as you go, if you're a trader and you go, let's just say market buy, because you'll eat into that depth, you say, oh, hey, right here at like right over the mid, I can buy this much or I can sell this much. And I can get to that volume and I won't move the market too much. Sometimes when you submit a market order, if that's what you're doing, that depth will vanish or all of a sudden just reduce dramatically. So you end up just like careening through, and moving the price significantly, right? And of course, it's hard to do that unless you're trading significant volume and trading at, market with market orders, right? And so that'll happen sometimes. So like if you explode out the depth and you say, hey, I see all these things on your order book, all these orders. If I, were to buy $1,000 or $5,000 and all this, and based on me looking at the order book, if I bought 5K, it should have really only moved that much, but it moved 2 or 3 times more than what I expected when I did my market buy or market sell. Sometimes that is an indication of a market maker. Either one, it might not be nefarious. It could be just one market maker not doing their job properly and pulling the order back to front run stuff, or it could be an indication that someone's like spoofing volume, right? So it's hard to say, but typically seeing a pattern or behavior like that is quite indicative of that kind of like behavior. So, but either way, there's no like definitive way to really suss that out unless you're in the books trading them every single day and trading significant volume, and you're used to that exchange's nuances, right? You really have to be an expert for trading a particular exchange to suss that out. One thing that you could, like as a high level heuristic, again, this isn't like a great measure, but is to look at turnover relative to what your float is. So let's say I have $1 million of liquid AKT out in the world, right, in total, and I see my daily volume is 100 million, right? It begs you to question, like, how is that possible? If there's only $1 million worth of AKT out there, how can this $1 million worth of AKT turn over 100 times in a single day? That really doesn't make sense, right? So projects with low floats or low tokens in true circulation, right, with high volume on top of that, with prices that don't move a lot, that smells funny, right? Because then it's like, who is manipulating our market? The only way to do so, not only way, but one of the ways, it's an indication, again, it's not foolproof or bulletproof, is that's an indication of wash trading, right? So if Joe and I are wash trading back and forth with one another, prices won't move, but we can manufacture a boatload of volume. And that's kind of a more unsophisticated way to do it, right? If that gets out of hand.
Go ahead, Noah.
On the mechanics of market making. So first of all, we're loaning the tokens, so there's no actual sale taking place.
That's right.
And second of all, you said that the market makers would spread the depth across. I actually learned about this watching you in one of those videos. Like, I really appreciate it. I never knew what that plus 2% and minus 2% thing meant. I've been looking at it now every day for different tokens, and it's really interesting. And I was wondering, when you go ahead and deploy that, or when the market makers do that, is it done gradually, or is it just going to be one day I look and I'm going to see, oh, Akash depth is now 2?
It's gradually. It's a combination of both. So it's really several functions. One is how quickly do we deploy that capital in? Let's just say we took all 3.5 million AKT and said, all right, we got one market maker, we're going to send it like all $3.5 million worth of AKT, and we're going to deploy it like in the next day. Then you'll see a dramatic jump on day one, right? That's one part. But we're deploying that more gradually, so you should see that grow over time. And in addition to that, the depth numbers aren't static. They will change. They will fluctuate up and down, right? And part of the reason for that is, again, like I said, the market makers, they're not doing it out of the goodness of their own heart. They're also running an enterprise and they want to make money, right? And so how do they make money besides token price being higher than where the strike price is, and therefore they get a huge windfall at the end of the contract? Over the course of the term, they try to make money as well, right? And how they do that typically is buy low, sell high, right? And so when token prices depreciate, they absorb some of those tokens, and hopefully as token prices appreciate, they sell the token back up there, right? And so there's that delta between the buying and the selling. And when prices are continually depressed, especially like it depends on where the strike prices are. So let's just say I have a strike price with an exchange, or it's not an exchange, with a market maker that's 80 cent AKT. The strike price is 80 cents, right? Well, for them, they're like, well, Akash is like still 2x 80 cents. I have room to play with. I'm going to be more aggressive in buying AKT off the market, right? Because I'm not going to be screwed economically speaking. But let's say the strike price is at $2 and AKT trading at $1.40 now. The market maker is going to be less willing to deploy as much capital. They'll be a little risk adverse on the bid, on the buy side, right, to absorb sales. So there is like a fluctuation that gets managed. Obviously, it's my job, my team's job to be out there, be up their butt and say, look, listen, hey, AKT wrote up this for a while. We knew you were there. We knew you made money. Fucking be there now when prices are going down, right? And so that's where the management comes in to say, look, like, okay, you made, instead of 2 fistfuls of money, you made 1 fistful. I want you to give that fistful back now to support markets, right? And so that's a lot like to do with managing the market makers, looking at these reports and keeping them honest as much as possible. And so hopefully that helps round out the picture for you there.
Yeah, it's much more complicated than I realized.
Okay, yeah.
I didn't know that was that much work.
Right? It's not.
But in general,
Sorry?
more depth is
Good.
a good thing on balance.
Yes, absolutely. More depth is always a good thing on balance. It just so if you can, it's just a very oversimplified example, right? You have project A, project B, both is, let's just say, identical, right? DeFi project A versus DeFi project B, and project A has $1,000 worth of depth. Project B has $100,000 worth of depth, right? And let's just say I can't choose between the two. I just want to speculate on one of these two DeFi projects, whether I'm an institution, an individual, or whatever, just a speculator, right? And I have a lot of money and I want to speculate big time. I can't really speculate on the coin that has $100 worth of depth, because what am I going to do? Buy $100 and the token moves 2% already? On the project that has 100K worth of depth, however, I can buy 80K worth of this stuff, get a big bag of it, and if things go through the roof, I also know that I can sell that 80K on the other side without collapsing prices, right? So added depth is definitely very, very important. True depth, right? Again, this stuff can be spoofed and managed in certain ways. But yeah, that's so to answer your question a long-winded way in a shorthand fashion now, is added depth is on balance always good.
That makes a lot of sense, because the people who have the token already, I mean, it makes it more difficult to sell if there's less depth, but they like the token ostensibly, and people who want to get in have a difficult time. That makes sense.
Exactly.
That does make a lot of sense. Thank you.
Yeah, my pleasure.
So regarding the, now that you talked a little bit about increasing the liquidity, the depth, so that more and more, I guess, deeper pockets can come in, is there any format, any method to attracting, perhaps, and this has to also do with Greg talking about having a 10x by 10 months, by the end of the year. So from where you stand, and I know you're not the one who said that, but how do you see us getting there, right, today, right? Are these 10x goals attainable? Do you guys have a method for attracting more integrations from Web3 or penetrating deeper within Web2 projects to kind of bring this all in, I guess, I don't know if that's a big swing, but that was the next question that we had.
No, it's a good question. And to answer, flatly, I think 10x is a stretch goal, but I think it's doable, right? And because, like, even though we're dealing with what seems like large numbers, like right now, I think our annual recurring revenue, were to project out where we are now, within the last month in February, we're about at a $45 million or $4.5 million equipment. We want to get to in the 40s, right? As far as like network fees on an annual run rate basis by the end of the year. It is possible. It's aggressive, but I think it is reasonably aggressive. And flatly speaking, if we want to perform and we think where we want Akash Network to be, those numbers aren't out of the realm of possibility, right? So, what are methods for getting there? So before I answer that, is what's going to kind get Akash's performance up, what's going to get people interested in purchasing the asset, right? Institutions and the like, is continued progress, right? There's always going to be like memes and random stuff out there that's going to grab people's attention for short spans of time. But for Akash, we're building a utility, right? We have built a very rooted utility, and now it's to get that utility to work and more people using it all throughout the tech stack, right? So not just Web3, but Web2 as well, using Akash. So it's really getting more utilization, higher demand for Akash's product, right? AKA the super cloud, and getting more suppliers or providers onto the network as well to facilitate that and serve that demand, right? So we're a two-sided marketplace, as you guys know, and we need to grow both sides, right? So the strategy for growing both sides really is, it's product-driven, technology-driven, and also far more now, more important than ever, I would say, is marketing-driven, right? And so we're building out the marketing and growth side of the house really significantly, putting significant resources behind that. That will be the team that is going to grow the most this year. And as we allocate, the bulk of our added capital, or I guess more capital towards this team in order to grow that out, because we need to get a better job at getting the story out there, pitching what Akash is, teaching people what Akash does and why we're so capable, right? We're the leader in DeepIn. We're the category creator in DeepIn. We're leading in fees, we're leading adoption, we're leading in utilization. Why don't we give more love? And part of it is because I think the megaphone for us isn't big enough and it's not specific enough. So we're taking strides to really dramatically improve that this year. And all of that comes down to really continued adoption and continued growth and demand, right? That is just getting more projects using Akash, right? Like, familiar with the Navigator program, and so that is to really help bolster Akash Network and the core team's ability to bring on new customers, to help get them started, to help them answer questions, technical and otherwise, help continuing to follow up, offer Auth-Z allocations where needed, to give them some credits to get started, right? All of those things are super important, and of course, it comes down to the core technology and the product, making it as useful, as powerful, and seamless as humanly possible. Right. So if you were a technical user of Akash, comparing where the console is today relative to where it was a year ago or even 6 months ago, it's night and day, right? Mm-hmm. And that's how we've been able to grow the network fee so substantially, month on month and quarter on quarter. So a lot more of that, right? Accelerating the pace of building and innovation, building out the marketing team and growth team to be able to better acquire customers and get the messaging out there more consistently, loudly, and deeper into areas where it needs to be, specifically within AI, right? And getting onto the radar of significant institutions, right? And that's how you do it. It's not like you go knock on the door of institutions and say, hey, here's an Akash flyer, we do it digitally, right? And the only way to do that, especially if there's a impending downturn or, even in any market really, is going to be, and I don't mean depending where it's going to come, but if it does come to pass, right? Proof is in the pudding, right? And true adoption, true usage, true metrics will rule the day. And so that's what we got to do. As far as exact strategies for doing so, it's really ground up. Roll up your sleeves, dirty work, right? Attending events, doing marketing strategies, user acquisition strategies. Hey, testing this cohort A versus cohort B. Do users respond to this kind of messaging or that? What kind of resources do they want? Honing down on the type of resources on the supply side that we're going to bring onto market, right? If you compare PIP 1 to PIP 2, PIP 1 had like a smattering of all these random GPUs, not random, but 5 or 6 different GPU models. PIP 2 really narrowed it down to like 3 key GPU models, right? And then PIP 3 will be even more focused, right, into super high conviction categories where we know existing users want, and we know users in the wild really want to use as well, right? And so I think for Akash, the biggest thing I'll button it up with, we are a general purpose cloud, right? And we aren't just a Web3 cloud, we are a cloud, right? And so that is something super important. I think a lot of developers, on the builder side, as well as suppliers on the provider side, are now seeing where crypto is a piece of the story, right? It's simply a thing to enable the mechanism of exchange, secure network, etc. But the function of the network is purely utilitarian, right? Mm-hmm. And so that's where we're going to continue to push towards projects to adopt and use Akash. And one of the reasons why we launched credit card payments is to kind of meet the developer, the average developer, where they are, and not in a Kepler wallet, but where their Visa or Mastercard is.
Yeah, I appreciate that. Thank you so much for that, actually. So that kind of walks into one of our last questions because I want to be cognizant of your time. So we've recently
I
seen.
can go a little over. No big
Okay,
deal.
we start a little
Yeah.
later. Maybe a couple more. Maybe the crowd has a few more too.
Let me know
But
if you want me to start, Galen, because I've been talking a lot. I just have a few questions, yeah. But
Okay, no problem. But this is one of my last ones, which is that, and it connects with what you were saying before. So we recently seen Greg reach out across the aisle to represent all of Compute DeepIn, right? He has declared himself the main influencer, main KOL of DeepIn. Are you aware of any greater vision that you can share with us? Could these relationships with IO, Ether be symbiotic in some way, boosting the sector or the mind share? How do you generally view our competition, right? And do we play in the same lane, at all?
Yeah, I think overall the ethos behind it and the motivation behind it is absolutely accurate, right? While you know any infighting, just zoom out a little bit, right? Think about it. By 2030, the global cloud marketplace is slated to grow to somewhere in the size of like $2 to $2.5 trillion, right? If a few deep in networks are here infighting over Akash's ARR is $4.5 million, right? And other people, I don't know their closed source, hard to say, but let's just say it's somewhere in that realm, whatever, plus or minus a zero. It's literally a rounding error for someone like AWS, right? And if we're all infighting over this really tiny slice of the pie versus spending our time really building out what our capabilities are in the market, it's just not going to lead to a lot of, I think, good results, right? Or at least optimal results. So even if there was no infighting or collaboration, even if there was no collaboration, rather, and you take out the infighting and you simply focus on pushing your product, building your product, making it better and better and better, increasing adoption, everyone wins, right? A rising tide lifts all boats.